Alright guys, so what I went ahead and did here is made this spreadsheet which will allow me to keep track of how much passive income my dividend portfolio is going to make based on the current dividend yield and the number of shares that I own. Now before I get into this guys, I want to just jump over to my M1 Finance portfolio and provide you with an update of how much money I have funded into this account since last month, how much I have earned in dividends, and any other changes I have made to that account, as well as my returns so far with this portfolio. First of all, taking a look here at the activity tab, we can see that I invested a good amount of money into this portfolio in the month of May. On May 4th, it was $2,500, May 11th, another $2,500, May 18th, another $2,500, May 26th, $1,000. So in the month of May, I invested another $8,500 into this dividend stock portfolio. Now going forward, I actually dropped my contributions down to $500 per week, and if you've been following this series for a long time, you know that was the amount I was investing when I had just gotten started with this portfolio. And if you want to know my reasoning behind that decision, well, this chart right here explains exactly why I am slowing down my investment contributions. Because when the market began tumbling, this is when I ramped up my contributions. And at the peak here, at one point in time, I was investing $2,500 and even some weeks $5,000 per week into this portfolio. Because I like investing large sums of money during times of market pessimism. But now, the market has just taken off like crazy, and this has been the quickest recovery ever in terms of the stock market, largely due to the amount of stimulus money being flown into the economy. So in my personal opinion, I don't think the stock market is a great deal anymore. We've seen such a return taking place here. Now this is largely driven by tech companies, but even so, we can take a look at the Dow and look at that as well. But I just don't think that the stock market is a screaming buy right now based on this rally that we have already seen. I think there are great deals in certain areas of the economy, but overall, it seems to me that prices are returning to a level that are no longer as appealing as they were a couple of months ago. And even looking at the Dow, which is of course these larger cap companies, many of which are dividend payers, we see the same kind of chart taking place. You know, the worst appears to be behind us when the Dow dropped to, around 18,000, and here we are back at 26,000. So I just do not see any real reason to funnel large amounts of money into this portfolio right now. Instead, I'm going to let this portfolio earn dividends, have them reinvested, and take advantage of asset appreciation with a lot of these dividend payers that I was able to accumulate at discounted prices during the overall market pessimism. So going forward, I will likely just be doing $500 per week, $2,000 per month into this portfolio until we hit the $100,000 figure, which based on asset appreciation and the additional contributions, I see no reason that we can't potentially hit that by the end of 2020. So that being said, guys, let's take a look at the dividend activity in this portfolio in the month of May. So first of all, on May 6th, I earned a dividend from Lowe's in the amount of $20.62. May 14th, I earned a dividend from Apple in the amount of $5.66. And that is it for dividend activity. Now, I did make one change to this portfolio, and I want to show you guys what that was here. And I actually did it yesterday, and I'm going to be completely honest with you guys. Based on what is going on today, this was really not that great of a move. But in a different account other than my M1 Finance portfolio, I began investing in an ETF called JETS. And JETS is essentially an ETF that owns a basket of different airline stocks. And I invested a sizable amount of money into this fund, and I just happened to do it at literally almost the perfect time. So right after Warren Buffett sold out of the airline stocks and there was a lot of market pessimism, I decided to dive into this ETF and I put some money in JETS. And in a moment here, I'm going to show you guys what that fund has done. But as a result of me having so much money in JETS, I realized that I was pretty overweight in the airline industry as a whole, and this being a dividend portfolio, I didn't really think having these non-dividend payers in this portfolio made sense anymore, especially when I was so heavily invested in jets. So I ended up selling American Airlines and Delta Airlines very close to break even here. Unfortunately, I don't remember what my exact cost basis was. I'm not sure if I'll get a statement from M1 Finance. If so, I can update that in the next video. But if I was down at all, I want to say it was in the range of less than $500 total. But I have already actually trimmed off a little bit on that Jets ETF and taken some profits because of how fast it has moved up. So it just offsets a smidge of those gains. Still, probably should have left those to trend upwards. And if I had sold them today, I would have been in the green. So patience pays in the long run, but I felt my money was better placed in some of these dividend payers, and I didn't want to be too overweight in the airline industry. So I sold about $5,800 of airline stocks, and they were spread out across the other dividend payers in my portfolio. And so if we look at this Jets ETF here, it's moving like crazy. I mean, this is one of the fastest returns I've ever earned on one of my investments in the past, and I purchased my shares at a cost basis in the mid-12s. It was right after Warren Buffett sold out of his investments. I want to say it was somewhere around this range here. I paid around $12 to $13 per share. So like I said, I already sold off a portion of my position in this fund just because of how fast it moved up. I didn't know if this is really sustainable. So I sold off a portion as a bit of a hedge there, and I invested that into a financials ETF. So right now, outside of my M1 portfolio, I am doing some ETF investing, primarily in the airline industry and the financials sector, just because I feel those are two areas where you're going to see, better than average returns going forward as these businesses recover. Alright, so now if we jump over to the holdings tab of my portfolio, we can see what the performance has been so far, and we are literally almost at break even here, down just $77. And if you guys have been following along in this series for a while, you know that I had this legacy position here in General Electric that I've had since 2018. I haven't purchased any new shares of this stock since 2018, and I've basically been bag holding it because GE got really severely dragged down in the recent economic crash. So I am down over $7,000 on this position, but I have had gains from my other stocks that have already offset that loss. Now, a lot of people have asked me, why don't I just sell GE? Why am I bag holding it? And to be honest with you guys, at the end of this year, when it comes to assessing my situation, if I'm still down massively, I'll consider selling it and just getting rid of this from my portfolio. It has been the worst investment I have personally ever made, so I would hope that people don't judge me based on this one position here, but instead maybe look at some of my other picks here that I've made as new money flowing into this portfolio. So as far as the new money I have funneled into this portfolio, I'm up quite a bit if you take out this General Electric position from the equation. But that being said, let's start with the biggest winners in the portfolio and work our way down. So number one is Lowe's stock. I am up an astounding 56% in this position. This is just a no-brainer to me in terms of, a business that was poised to do well while people were stuck at home with nothing to do. They spent their time on home improvement. Boeing is my second best position, up 31%. This is a position I am going to probably double or triple my money on in the term of probably 3 to 5 years. I'm not sure how long I'm going to hold it, but at some point I will sell it off and reinvest that money across this portfolio so it can earn dividends unless Boeing reinstates their dividend. Number 3, Emerson Electric, very heavily involved in manufacturing, up 30.5%. GPC, Genuine Parts Company, up about 19%. This is the parent company of Napa. Coca-Cola, up 10%. Apple, up 13%. Dunkin' Brands, up 6%. Microsoft, up around 9%. National Grid up 2.8, and IBM, it's about break even. And the best part about this to me here is that these stocks all pay dividends as well. So I've made money here from both asset appreciation or buying low and having that stock price climb higher, and I'm also able to earn money every single quarter in the form of dividends, meaning I'm being paid in two different ways. So now as far as the stocks I am down in, we have 3M down about 6%, Walgreens Boots Alliance down 7.5%, and of course General Electric, which we have already addressed. I am doing all of my dividend investing through the M1 Finance brokerage. If you're interested in checking it out yourself, I have a free training down in the description below that walks you through step by step how to get started with this brokerage and the ins and outs of it, so you can pretty much do this with no trouble at all. There's also an affiliate link if you want to sign up for M1 Finance and start out a portfolio yourself, and I will earn a small commission in the process, which of course I do appreciate. But that being said, guys, now I want to analyze the dividend stocks and talk about how much passive income I am earning from this dividend portfolio currently. So what I went ahead and did here is I made a spreadsheet of the stocks in my portfolio, the number of shares I own, the dividend, and how much income I will make from them annually. Now, I am reinvesting all of these dividends back into my portfolio because I have no need for this income in terms of spending it on any related expenses or household things like that. My goal is to reinvest this money and down the road, when I need the money, draw on those dividends as a source of passive income. So as we already discussed, American Airlines, I sold that position yesterday, so there is no passive income being earned from that stock. Next up, we have Apple. They pay a pretty small dividend, but a dividend nonetheless. I own 9.7 shares of this company. They pay a dividend of 82 cents per quarter, which will earn me $31.82 per year from dividends. Next up, we have Boeing, which used to be a dividend payer, but due to the economic crisis and issues with their 737 MAX aircrafts being grounded, they've had to suspend their dividend. So this is a pure asset appreciation play where down the road, I'm going to sell this stock. I'm aiming to at least double my money on it, and then I will either see if they're going to reinstate that dividend or sell it and invest that money across my other dividend payers. So there are no dividends being earned from this stock currently. Next up, Delta Airlines. As I mentioned, I sold this stock out of this portfolio, so no dividends being earned there. Okay, next we have Dunkin' Brands. I have 83.6 shares of this stock in my portfolio, and it pays 40 cents per share on a quarterly basis. So over the course of 1 year, I will earn $134.60 in dividends from Dunkin' Brands. Next up, we have Emerson Electric, which is one of the stocks I am up the most in currently. And again, like I said, this is why I love being able to be paid in two different ways, because I own 90.3 shares. It pays a quarterly dividend of 50 cents. So over the course of 1 year, I'll be able to earn $180.60 in dividends. General Electric used to be a big dividend payer, but after some financial hardships, they had to cut that dividend. I do own 1,074 shares. It pays a penny per quarter per share. So this allows me to earn about $43 per year in dividend income. Next up, we have GPC, Genuine Parts Company. I own 64 shares, which earn a quarterly dividend of 79 cents a piece, and that is over $200 per year in passive income, $202.24 in dividends annually. IBM, in my opinion, is one of the best dividend stocks that you can buy right now, and that is not any kind of financial advice, guys. That's just my own personal feelings on this stock. But I think this is a great blend here of both high income potential through dividends as well as growth potential through their cloud computing segment. I own 44 shares. They pay $1.63 in quarterly dividends. So per year, that's going to be $286.88, almost $300 per year in passive income. Next up, we have Coca-Cola, one of Warren Buffett's most well-known investments. I own 118.3 shares. It pays a quarterly dividend of 41 cents. So that is $1.94 and 1 penny in dividends earned per year. Next up, we have Lowe's, which has been pretty much the best individual stock investment I've probably ever made in terms of my return in such a short period of time. I own just under 43 shares of this stock. It pays a quarterly dividend of 55 cents, so that's $94.38 per year in passive dividend income. Next up, we have 3M. I own 19.6 shares. They pay $1.47 per quarter, so that is $115.25 per year in dividend income. And then we have Microsoft, which is mostly a growth play, but they do pay dividend income as well. I own 17 shares and they pay 51 cents per quarter in dividends. So that is $34.68 per year in passive dividend income. National Grid, my conservative utility investment here, I own 107.6 shares. This company actually pays dividends twice per year, $1.06 per biannual dividend. So per year, that's going to be $228.11 in dividend income. Then we have Walgreens Boots Alliance. I own 129.9 shares. It pays 46 cents per quarter in dividends. So that's going to be $237.72. So in total here, passive income earned from this portfolio is currently $1,783.25 per year. Every single month, that's about $148.60 or about $5 per day in passive income through dividends. So it's certainly not an astounding amount of money, but it's exciting because this is money that is 100% passive. I don't do anything to earn this money. I have simply deployed my existing money and it is growing through dividend income. You know, my dividend income could probably pay for a cup of coffee per day from Starbucks, but I'm reinvesting it because over time, the reinvesting of dividends allows me to earn more dividends, so the passive income from this portfolio will just continue to grow. But it's certainly exciting that this is about $150 per month of money that I'm not working for or working towards that is just consistent through a dividend portfolio. And the overall yield on my portfolio is about 2.5%. So if I wanted to invest in just an income ETF, I could probably get a yield of 3 to 4%. Or if I picked very high yielding dividend stocks, I could probably get up to 4.5 to 5. But in this portfolio, I have a blend of both some growth stocks as well as dividend stocks. That way I can be paid in two different ways. So 2.5% is a fine yield for me, one that I am happy with, and it allows me to have growth potential as well as income potential within this portfolio. So anyways, guys, that's going to wrap up this video. I hope you enjoyed it. If you made it to the very end, go ahead and drop me a comment down below and let me know what you think of this portfolio. Do you agree or disagree with the picks? I would love to hear what you guys think. Like I said, if you want to check out that free M1 Finance training, that's down in the description below, as well as a link to sign up for M1 Finance if you want to start out your own portfolio yourself. This, in my opinion, is the best brokerage for dividend investing due to number one, fractional shares, and number two, the automated rebalancing features and the portfolio level dividend reinvestment. This all makes for a great platform for long-term investing as well as dividend investing. But thanks so much for watching, guys. I hope you enjoyed this video, and I will see you in the next monthly update. Alright guys, so it's actually Friday now, and I wanted to add one last update here to this portfolio update. I have decided to sell Boeing because of what has happened in the last 2 days with these airline stocks. And I know I mentioned to you guys as well earlier in the video that I owned the Jets ETF. I have since then sold that off as well. Based on how fast these went back up in value, I do believe they will trade higher, but anytime that you see a stock or an asset increasing, 10% plus for multiple days in a row, I'm more conservative. So for me, I would rather lock in a profit than, gamble and risk that's turning into some type of, speculative rally. So I ended up selling out of Jets based on how fast it went back up. And Boeing is doing the same type of thing today. So first of all, I want to show you the stock. So far today, we're up almost 15%. It seems to be climbing higher. And I bought M1 Plus, which is going to give me an afternoon trading window. So it's going to execute the trade here at 3 p.m. So I'm going to place the order to sell Boeing. Unless there's some major move downwards, then I'm going to sell. If it drops back to, where it started today, I'll probably hold on to it. But I just did not expect this to happen here with Boeing. You know, having it going from 120 per share, even at the low of 90, I think, back up to 211, because we're getting back into the territory where this stock was trading before the market, crashed as a result of the pandemic. So, in my opinion, I feel like this rally is way ahead of where it should be, but I could be wrong. Like I said, I fall on the more conservative side. So I'm going to sell Boeing and I'm going to invest that money across my dividend payers. And this is why when we go to my holdings tab, I'm now up 50% in this Boeing position. And as I said from the beginning, I bought this for the purpose of asset appreciation. And I just feel like if you're holding it past a 50% gain in a 2-ish month period, 2 to 3 months, I just feel that's greedy. I could be wrong, but, locking in a profit, nobody ever got hurt by taking profits. Now, the only thing that stinks about this is I am going to have to pay short-term capital gains. I could hold this for a year, let it sit here, but to be honest with you guys, I'm just not comfortable with how fast it went up in value. So I'm going to go ahead and initiate this sell order. About $9,000, assuming it stays in this price range, will then be reinvested across the other dividend payers in this portfolio. And I just think it's a good move in terms of, taking profits and then investing that money into dividend paying stocks. And I was able to, ride that wave here with this rally here in Boeing stock. So I'm going to go ahead and initiate that sell order now. As soon as I remember how to do that. So give me 1 second here. All right, so I went ahead and removed Boeing from this portfolio. As you can see, it says, are you sure you want to make changes in your portfolio? Any removed slices will be sold during the next trade window. Proceeds will be reinvested into this pie. So I'm going to go ahead and click confirm, and then I'll show you guys what that looks like over here. It's going to say that we have a trade pending for the afternoon trading window. So if I view details, that is going to be selling Boeing stock for an estimated value of $9,000, and it's going to invest that money across the other stocks in this portfolio based on my target allocations. So unless the stock goes down, I'm going to go ahead and follow through with this order, and I'm going to sell Boeing here and take my 50% return because I feel that is a very fair return and one that I'm happy with. So there's my quick Friday update, guys. Thanks for watching, and I hope to see you in the next video.